Welcome to Moneyman. This is state of the markets for the month of March 2026. This is where we look at the market's internal data, decode and convert all the noise that is around us into solid market signals. And there is a lot of noise right now in the markets. Let's dive in. A bit about us. This is what I've done in life generally, and we help working professionals create wealth so that they can retire rich. It doesn't happen automatically. Visit our website for more information. So this is our quant market map, which is our proprietary tool which we use to measure uh, changing the turning points in the market. The entire month of March has been flashing reversal signals, as you can see from all the dark greens that is there. However, the markets did not reverse. Now this is something that is very unique to geopolitical events. Sometimes they can just keep dragging on and on. Look at the war. People thought that within the first 2 or 3 days, the war is going to get over. It did not. It's past 30 days now. Throughout this month, while we saw all these reversal signals flashing, nothing much has happened to the markets. In fact, they kept falling down. However, I have reason to believe that we may have seen the markets capitulating now, and the final phase may have already happened as of yesterday. But upwards confirmation is yet awaited. Let's see. I'll explain more about that when we dive deeper into this presentation. This is how the entire Nifty 500, that is the top 500 stocks in the market, behaved for the entire 1 month. This is a kind of heat map. If you see, there are very few pockets of green, and it's been an overall very red month. In fact, it is one of the worst months that the entire Indian markets have seen. Now, one may say that the last 18 months were bad, but this month was probably the worst of them all. Look at this. The Nifty 500 fell down by minus 11.39%. That is one for the history books for sure, because it is one of the worst falls. Look at the last few times this has happened. 2020, 2008, 2001. All of these were characterized by huge worldwide issues, crisis that went on to crash worldwide markets. This time it is war. However, what India is facing, in spite of not being directly impacted by war, are the secondary effects, which is primarily because of oil logistics getting impacted and oil prices shooting up. And we are seeing a huge impact because of that. So I had shown this slide in the last month also, and the month of March till March 2026 happened used to be a generally positive month with much higher volatility. But look at what has happened. Just 1 month has completely impacted averages. The 5-year, the 15-year and the 25-year averages have completely gone for a toss just because of this 1 month of March 2026. Nevertheless, we are done with it. April has usually been a very good month. April is usually very positive and probably one of the best months for Indian markets from an overall average point of view. However, that positivity will come only once the war conditions or the oil logistics get better. So we'll have to wait and watch for that. This is a hugely news-driven market right now. Let's dive deeper into what happened in the month of March. Everyone knows that it was one of the worst months. Portfolios have gone for a toss. Everyone knows that there was a bloodbath in the market. So I'll probably skim through this and come to the main part towards the end of the presentation in terms of what I'm expecting going forward. Nevertheless, look at the destruction that has happened in all the indices. Nifty, Nifty 500, mid cap and small cap. All of them have fallen by double digit. This is one of the very, very rare ones that has happened, and they've dragged the entire year, calendar year, down with them. There is absolutely no strength in the markets right now. Absolutely no strength in the markets, and we are really languishing. These are extremely weak markets that we see, as can be seen from this particular metric of index strength. The breadth in the markets has completely evaporated. Look at the number of stocks which are behaving strong. They are very, 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 very less in number. Now, this is something that we have to deal with. We have to live with it for now. All of these point to the fact that Indian markets are extremely weak right now. Look at the overall market breadth. We are seeing hardly 10% of stocks which are in some manner behaving strong. Otherwise, it's a complete rout in the markets. In the last 1 month, we've seen the overall market breadth get completely impacted. From February to March, this is the kind of impact that we've seen. And this, of course, you would have felt it in your portfolio also, but this shows how tough the markets have been. This is an extremely important data point. How have returns been distributed across large caps, mid caps, and small caps in the month of March? There's a 0 point, and see, everything is skewed towards the left side, with small caps on an average, that is stocks, taking the maximum beating. Even mid caps have taken a lot of beating. In general, the entire market has taken a beating, of course, but we are seeing a huge impact on individual portfolios, and this one particular slide tells you how portfolios have got severely impacted. There was only one way out, to be very honest, to deal with these markets, which was to stay on the sidelines, stay on cash, which I highly doubt most of the retailers would have done. A lot of people have seen their capital literally evaporate, and that is the pain that is being felt in the market right now. Stocks have not, forget about forming net new highs. We've seen stocks forming net new lows, and the numbers have only increased. Look at the last 2 days especially. Of course, the entire month was negative, as I said. There is no positive value. There's a zero line. There is no positive value at all throughout the month. The last few days of the month, especially March 23rd, March 27th, and March 30th, these trading sessions have seen huge selling that has happened, especially March 30th, that is yesterday. I feel that this is a solid indication towards markets facing a complete capitulation, and that is extremely required for bear markets, because bear markets don't end just like that. They end when the news is worst and when there is a capitulation phase that happens, when everything goes down completely southwards, and that has happened in the last 2 trading sessions. Of course, like I said, let's wait and watch on how things change and what positivity comes in. But I do believe that a majority of selling has taken place. Remember that March is also known for market bottoms, and let's see if that still sticks to the month of March. This is the advanced decline velocity index, and this again, needless to say, has gone completely down to the dumps. I'm so sorry, has gone to the dumps. We've seen everything just go down and down. Now, these two are extremely important data points. I normally track the green and the red zones. The green zone indicates how many stocks are above both their 4-week and 10-week moving averages, which indicates that they are in an upturn. And how many stocks or what percentage of stocks are below both their key moving averages, that is 4-week and 10-week, which shows how many stocks are in a downturn. See what has happened since the beginning of March. The red kept expanding, and it is today almost 88-89%. That is 88-89% of stocks are below their 4-week and 10-week moving averages, which is in a downturn. That's the big problem. Classic bear markets. But it has also been seen that these are the conditions when markets reverse usually. Let's see what happens going forward. The one on the right shows us what percentage of stocks are away from their respective 52-week highs, which is, as you know, very key metric that I track to understand the health of the market. That's why I call it market health. The last 3 months were bad. See, look at the number of stocks in the top 2 quadrants, the green and the blue. The last 2 months were bad, but last 3 months were bad, but the month of March has gone completely worse. The number of stocks that were within 10% of their 52-week highs, they've actually shrunk really a lot, almost 1/3 to 1/4. That is really bad. And there has been a cascading effect. Look at this. Almost half the stocks are trading more than 40% below their 52-week highs, which just a month back wasn't as worse. That should show you how bad this month of March has been. The sector rotation, or how different sectors have behaved over this month. Of course, this month we saw every sector giving negative returns. So the ones that gave the least negative returns are showing as outperformers in the top 5. Not much of consequence, but this also shows that when the Nifty 500 has fallen by almost 11.4%, it was 11.39%, these indices have fallen the least, or these segments of the market have fallen the least. Mind you, I track not only equity, but commodities also, silver, gold, and GSEC also. This just shows me which are the pockets which are strong and where I should be putting in money for myself and my clients. As simple as that. So anyway, this shows which are the segments which have held on in this March bloodbath. And it's extremely important to keep a track of these particular segments going forward. Factor performance. These are investing styles that are prevalent in the market. And you can see that from March onwards, everything has gone southwards. So nothing much to write home about. Something that was holding on till now, which was value buying in the market, that has also seen a huge impact. In fact, it has also fallen one of the most. So we'll have to see how these trends start shifting from the month of April. But one thing is for sure, that investing styles change completely. The leaders that were there in previous markets, as soon as the markets turn, these will completely shift. So that is one of the reasons why I'm keenly tracking these and showing it to you as well. I missed one slide on purpose, which is which sectors and industries have done well. See, everything has been negative. I've already shown which are the pockets which have been resilient. There's no point in looking at anything right now till the markets turn around. And that is what I'm doing right now. I'm not in a hurry to invest. I'm not in a hurry to deploy my money. I'm sitting on the sidelines. The moment I see reversal signals, that is when I will start looking for relative strength. So I'm not showing that particular slide right now. Look at FII and DII positioning. This is in the F&O market, this is in the cash market. I'm combining these slides so they give a unified picture. FIs have been carrying net short index positions still at record lows. These are multi-year lows. Look at this over the years. These are multi-year lows and they're still carrying those. Now, these are also levels from where there could be a sharp short covering. But you would have heard me say this before also. It has just not come because of the geopolitical event that has been going on right now. But once things change, this will start de-escalating really fast. The indices will start recovering really fast. We may see an almost V-shaped recovery as FIs try to cover their short positions and start getting rid of them. Look at the cash markets. This particular bar is for the month of March. And over the last 6 years, it has been the worst March selling by FIs, the worst ever. In fact, I'll show you some data going much beyond that also. It is probably one of the worst months of March. It has nothing to do with the Indian markets per se. It is a general risk of environment because of which the FIs have been pulling out cash from every market. In fact, the other EM markets like Korea and Taiwan, which attracted a lot of money in the last about 1.5 years, they have seen much worse selling. So it's been a general risk of environment. However, something keen to be noticed here. This histogram, the one below, it belongs to DIs. DIs have been buying hugely. In fact, they bought record amounts in this particular month of March. In short, our mutual funds have gone full on shopping. They've positioned themselves really well. And I believe that they've gone over and above what the SIP money was coming in. They have deployed their cash positions also that they were holding since the last about 4 to 6 months. That's a good sign. These DIIs have really shopped a lot and they positioned themselves well. And I believe that there is a lot of money that is going to be made in the coming months. This is why I say that March 2026 is one for the history books. This is the FI cash market activity. And see, FIs have sold, all this data is in rupees crores. FIs have sold about 1.22 lakh crores just in the month of March. Since the last about 11 years, they've never sold as much. This is for the month of March over the last 11 years. And for the year, calendar year, they've already sold 1.7 lakh crores. Again, we are in line for a record year if they continue selling. The last 2 years, 2024 and 2025 calendar years, were already the worst. They sold about 3 lakh crores. They've already achieved more than half of that target. It's not a target though. More than half of that figure within the first 3 months itself. Look at this, and this is quite a revelation. And this is, in fact, one of the reasons why I'm saying that the month of March 2026 is one for the history books. This plots the March monthly returns on this axis vis-a-vis the number of big down days on this axis. What am I trying to show here? Big down days, what do I mean by that? Are basically days when the Nifty 500 has fallen by 1.25% or worse. I'm measuring the number of days and comparing it with how down the month of March has been in the last about 27 years. Data has been taken from year 2000 till year 2026. Now all of them are clustering around here. But look at the outliers. Of course, 2026, we saw 9 days when the Nifty 500 fell by 1.25% or more. But look at the August company that it enjoys. 2008, 2020, 2000 and 2001. This dot-com bubble. This was COVID. This was the GFC 2008, the global financial crisis. And 2026 is slotted right there. That's a lot to say. That, you know, this is one for the history books, and the capital destruction that we are seeing is equally bad just because of one geopolitical crisis. Remember that. Anyway, we are done with March. How am I reading the market from here onwards is what is more important. So I'm presenting this slide, which I have shown earlier also. It's a bit technical, please bear with me, but I am going to explain this to you. I'm not looking at absolute indices, absolute stocks for a change. What I'm going to focus on, which really helps during these market times, these market conditions, is the ratio chart of the small cap index to the Nifty 500, that is the overall broader markets. Since February, I've been tracking this, and I've said this quite a lot of times on my WhatsApp channel also, that this is the only metric that I'm really interested in. And I was very surprised to notice that small caps have been generally resilient compared to the overall markets. I'm not saying that they did not experience capital destruction. They did, but they fell down much lesser compared to all the others. Look at this particular slide, this particular data point. We are seeing this ratio chart rests somewhere between, somewhere at the confluence of this rising trend line support and this particular major support line, which links the June 2024 election low and the April 2025 low. It's a very important and very critical point. And we've been here since the past 3 months. This is Jan, this is Feb, and this is March. I was thinking that probably we'll bottom out in February. We did not. However, this ratio chart has not gone below that as well. It's still there. And in fact, this solid block candle shows that the small cap index has been behaving much better compared to the overall markets. And this is what I'm interested in. I believe that the financial year 2026-27, we will see small caps outperforming. And such market conditions, bad market conditions, have seen the next year small caps going up by almost 60 to 70% and other stocks multiplying much more. So this is something that I'm closely tracking, and I'll of course keep everyone updated on my channel. If you're not already part of it, please join. But this is what matters to me right now. This is what matters for the market. The moment we see this war situation abating a little bit, we will see small caps start running up first and like absolutely running for the gates. Already earlier I've shown that we have seen that there is a lot of result outperformance in small caps. Some great results have been declared, and I think that will start taking effect in the coming months. That's about it for now. Like I said, if you're not already part of our markets on the I'm so sorry, our WhatsApp channel on the markets and economy, then there's a great time to be a part of that. You can just scan this code and be a part of that. I post a lot of real-time insights on that, which I'm sure if you're an investor, you will benefit a lot from there. Once again, thank you for your time. I hope this has been of value to you. I will keep updating on how the markets keep changing, and let's hope for the best, that we've seen the worst of the markets and the new financial year brings in a lot of new and fresh energies. Thank you very much for your time.